A Harvard Business School study tracked 776 professionals at Procter Gamble working on real product innovation challenges. Here's what they found. Individuals with AI were 3 times more likely to produce ideas in the top 10% of quality. Not 3 times the output, 3 times the quality. And here's what makes that so important for your practice and for mine. The researchers went deeper and found that AI worked by breaking down functional silos. Marketing people produced more technically grounded ideas. R&D people produced more commercially viable ideas. A single person with AI matched the performance of a 2-person team without it. The coordination burden, all those meetings, the syncs, the alignment docs, that was being handled by the tool instead of the organization. But there's another piece to the story. Carter looked at business founding trends and found something interesting. Solo-founded businesses now account for 1/3 of all new US startups, up from 1/4. Now, these aren't hobbyists. These are people getting VC backing, building multi-million-dollar companies, and they're doing it without a big team. AI didn't give them better ideas. It gave them the confidence to act on the ones they already had. And so here's the lesson for your practice. This isn't about solo founding. It's about confidence. Let me be direct. If you talk to CAS practice owners, you'll hear some version of the same frustration again and again. My staff can see the issues when I point them out, but they won't raise them on their own. And here's the thing. That's not a training problem. It's not a talent problem. It's a confidence problem. And it's structural. Think about the economics of this. If you're a staff accountant and you suspect the client's margins are deteriorating, what do? You could raise it with a partner. But if you're wrong, you've consumed partner time with a bad read. Well, you could sit on it and hope that someone else catches it. That's safer. The cost of being wrong in public outweighs the benefit of being right. So the rational move is silence. And your staff aren't lacking instinct. They're lacking certainty about whether their instincts are reliable. And they've never had a low-cost way to find out. Until now. Here's what happens when you change the equation. A bookkeeper who suspects something doesn't smell right on a client's balance sheet can now investigate privately. This clearing account has had a balance for 3 months. What's in it? Where did it come from? Should it have been cleared by now? In 2 minutes, she either confirms her instinct or discovers it's a timing difference. Either way, nobody saw her test the hypothesis. And here's what we say at Fuel Accountants. Dead bodies get buried on the balance sheet. Clearing accounts where transactions get posted and sit there rotting. If the balance sheet's wrong, the P&L has to be wrong. Every practice owner knows this. The question is whether your staff have the confidence to go looking and the tools to investigate what they find. That's the shift. It's not that AI makes your team faster at production. It's that AI gives your team a private sounding board where they can test professional hypotheses at zero social cost. Wrong? Nobody knows. Right? They walk into your office with a finding, not a feeling. Over time, those private tests build an internal track record. Oh, my instincts are reliable. And that internal track record is the actual foundation of professional confidence. Confidence isn't a personality trait. It's earned certainty. And the earning happens in private, one confirmed instinct at a time. Now here's the part that should get your attention. The traditional CAS apprenticeship runs on a simple model. Years of production work build the pattern recognition that eventually becomes professional instinct. Data entry, bank recs, month-end closes, repetition over time. It works. It also takes a decade. AI compresses that timeline in 2 ways. First, a staff member reviewing AI prepared work across 5 clients sees more patterns per day than the old model allowed per month. The exposure volume multiplies. And second, and this matters more, the private testing loop means every hypothesis tested is a judgment rep. Not once a month when something unusual surfaces during a close, but every day across multiple clients. Here's the uncomfortable implication. Experience tenure is no longer a reliable proxy for judgment readiness. Production expertise compresses. The junior who develops production fluency in a year through AI has more years ahead to develop the relationship depth and domain expertise that still take time. That doesn't make your seniors obsolete. Their client knowledge and institutional context are real. But the assumption that a 10-year veteran automatically has sharper instincts than a 2-year AI native practitioner, well, that assumption might need testing. Okay, but here's where most practices break the loop before it even starts. The pre-scripted AI features inside your accounting platform, the auto-categorization, the canned insights, the anomaly detection, they answer the vendor's questions, not your staff members' questions. A bookkeeper who wants to test the margin hypothesis can't do it inside QBO's AI. She can ask, show me how this client's gross margin has trended over 6 quarters and whether the drop correlates with the supplier change in Q3. That kind of open-ended inquiry, the kind that builds judgment, requires more general-purpose AI working with exported data in the gaps between your platforms, the spaces that no vendor controls. And here's the thing. If a client member tries to test a hypothesis and the tool can't handle the question, that's actually worse than not having the tool at all, because it reinforces the doubt. Well, maybe I'm not seeing what I think I'm seeing. The tool's limitation becomes the staff member's self-doubt. That's a talent pipeline problem disguised as a technology decision. So for AI to function as a confidence-building tool in your practice, you need 3 preconditions working together. You need quality systems that surface patterns. You need context engineering that flags variances and exceptions so staff are brought to the issue, not left hunting for them. General purpose AI in the gaps that allows genuine inquiry, hypothesis testing, follow-up questions, open-ended analysis. And you need a culture where AI-supported analysis carries weight. When a staff member brings a finding backed by data, it's treated as a professional contribution, not a curiosity. Miss any one of these 3, and the loop breaks. No quality systems means staff don't see the patterns. Vendor-locked AI means they can't investigate what they see. A dismissive culture means they stop trying. But get all 3 working together, and something shifts. You're not just developing better practitioners. You're building the only retention asset that appreciates over time. An environment where talented people grow faster than they could alone. In an era where the cost of solo founding a practice has dropped to almost 0, that environment is your competitive advantage. So here's what I want you to think about. If your best person left tomorrow, not the salary, that's replaceable, what institutional advantage would they walk away from that they couldn't rebuild on their own within 6 months? If you can't answer that clearly, the instinct confidence gap isn't your biggest problem. Your value proposition is. But if you can build this infrastructure, if you can create a place where instinct becomes confidence through daily practice, you're building something that matters. You're building a practice that people want to stay in. Now, the AI native practitioner development framework breaks down what it takes: quality systems, general purpose AI tools, and a culture that values what these tools make possible. It's practical and it's totally free. And it's the foundation for everything else that follows. The link is in the description. I'll see you tomorrow.